It is 2:14 a.m. Your apartment smells like damp cardboard and cheap takeout. You are drinking bodega coffee. It tastes like burnt copper. Your eyes burn. You blink hard at the glowing screen of your laptop. You are staring at slide 47 of a pitch deck. It is a decentralized blockchain protocol for dog walking. It makes absolutely no sense. You check the banking app on your phone. The balance is $412. Your share of the rent is $1,800. It is due in 4 days. You close the app, you open the next deck. You have 34 more to read before the partners arrive at 8. You are 23 years old. You are a junior analyst at a venture capital firm on Sand Hill Road. You think you are here to fund the future. You think you are here to find the next Steve Jobs. You think this is a meritocracy of brilliant ideas. You are wrong. You are a human spam filter. You do not make decisions. You process delusions. Every day, you sit in a glass-walled office and you look for patterns. You quickly realize a terrifying truth. A profitable business is a bad business. Profitability is a red flag. Profitability means small ambition. A company making $1 million a year in actual profit is a local bakery. You are not looking for bakeries. You are looking for unicorns. You stop reading the business models. You start scanning for the vocabulary of the bubble. Artificial intelligence, synergistic ecosystems, disruptive paradigms, Web3 integration. You find a company that loses $2 on every single transaction it makes. They are burning cash at a catastrophic rate. You do not reject them. You flag the deck as a strong buy. You pass it up the chain. The first rule: the product does not matter. The narrative is the only product. You learn that venture capital is not about building sustainable commerce. It is about momentum. It is about convincing someone else that the fire you started is actually a star. The shift. You stop looking for businesses. You start looking for bait. You are 28. You are a principal. Your base salary is $250,000. Your net worth crosses $600,000. You buy a tailored suit. You lease a German car. You still feel completely broke. You do not read pitch decks anymore. You rewrite them. You sit across the table from brilliant, terrified engineers. They built something in their garage. They understand code. They do not understand high finance. You teach them how to lie, not legal fraud. Financial fiction. You teach them the religion of vanity metrics. They try to show you their net income. You slide the paper back to them. We do not talk about net income. We talk about gross merchandise volume. We talk about daily active eyeballs. We talk about total addressable market. You look at the founder. You tell him to burn $10 million in 6 months. You tell him to give the product away for free. You tell him to buy users at an unsustainable loss. He panics. He asks how the company will survive. You look at him with a dead expression. You explain that survival is not the goal. Explosive growth is the goal. The chart must go up and to the right. It must look like a rocket ship. Why? Because you need to sell the Series B funding round to a bigger, richer venture capital fund. It is a game of hot potato. You inflate a balloon, you paint it gold, you hand it to the next guy. You take a 2% management fee for the privilege of passing it along. The second rule: you are not building a company. You are manufacturing a financial instrument designed to be sold. The founder resists. He wants to build a real company. He cares about his employees. He slows down the cash burn. He misses the growth target by 2%. You call an emergency board meeting. You invoke the clauses in the term sheet he did not understand when he signed them. You strip him of his voting rights. You fire him from the company he built with his own hands. He cries in the boardroom. He talks about his vision. You watch him cry. You feel absolutely nothing. You do not see a broken human being. You see a capitalization table optimizing. You see a liability being removed. The shift. Empathy becomes an operational inefficiency. You excise it completely. You are 36. You are a partner. Your net worth is $14 million. Carried interest kicks in. You do not touch Excel. You barely touch your phone. Your most valuable asset is no longer your capital. It is your name. You are the Rainmaker. You sit at a private, invitation-only dinner in Aspen. You drink a glass of wine that costs more than your first car. You casually mention a new logistics startup in your portfolio. You drop a hint. You project supreme confidence. The valuation of that startup doubles by morning. Not because their code improved, not because their revenue increased, because you touched it. You sprinkled the holy water of your firm's brand onto their cap table. You manufacture fear, the fear of missing out. The other funds scramble to wire money. They do not do due diligence. They buy the momentum. You know the dark, unspoken math of the portfolio. Out of every 10 investments you make, 6 will quietly go bankrupt. 3 will break even. 1 will become a multi-billion-dollar behemoth. That one winner pays for the failures. That one winner buys the yachts. But look at the collateral damage of those 9 losers. Look at the thousands of young, brilliant engineers who worked 90-hour weeks. They sacrificed their physical health. They ruined their marriages. They were paid in worthless stock options, chasing a vision that your financial model had already doomed to fail. You do not care. They are statistical friction. They are the coal you shovel into the furnace of your own returns. You burn through human capital with the exact same indifference that a machine burns oil. The third rule: below 10 million, money is a tool for survival. Above 10 million, your reputation is the actual liquidity. You stop going to industry mixers. You stop talking to people who do not have capital, not out of arrogance, out of sheer untranslatability. The conversations become tedious. Normal people assign emotional meaning to money. They talk about mortgages. They talk about saving for college. You cannot relate. To you, $1 million is a rounding error. It is a blind in a poker game. Saying that out loud makes you a monster, so you stop talking to them altogether. The shift. The money detaches from physical reality. It becomes pure information. It becomes a scoreboard. You are 48. You are a general partner. Your net worth is $180 million. The exact figure fluctuates by millions of dollars a day. You do not check it. You do not notice. The game changes texture. It is no longer about building the illusion. It is time to cash out. It is time for the exit. The initial public offering. The SPAC. You take this bloated, fundamentally broken company, a company that has never turned a profit in 8 years of existence. You dress it up in the absolute finest vanity metrics. You hire the best investment bankers. You ring the bell on the New York Stock Exchange. You do the media tours on financial television networks. You wear a fleece vest. You smile. You talk about democratizing access to the future. You say the retail investor finally gets a chance to own a piece of the revolution. It is a masterpiece of deception. Look closely at the lockup periods. Before the retail investors, the school teachers, the nurses, the day traders, the index funds can even begin to parse the toxic balance sheet, you are already executing your exit. You are quietly dumping millions of shares onto the open market. You are locking in a 400% return. You are converting your fictional, inflated valuation into cold, hard, untraceable fiat currency. 6 months later, the quarterly earnings report drops. The illusion shatters. The true cash burn is revealed. The stock plummets 80% in a week. The massive layoffs begin. Thousands of people are marched out of glass buildings with cardboard boxes. The retail investors hold the empty bag. Their retirement accounts take the hit. The media calls it a tech crash. They call it a natural market correction. It is not a correction. It is a successful extraction. You subsidized a luxurious, futuristic lifestyle for metropolitan tech workers for half a decade, and you handed the final, crushing bill to the working class via the public stock market. You walk away clean. The final rule: the future is not a destination. It is an asset class. You mine it, you package it, and you sell it to the greatest fool. This is the void, the absolute peak. You walk into a boardroom. 5 people sit at the table. Together, you control enough capital to destabilize a sovereign currency. You do not raise your voice. You do not argue. You speak for 3 minutes. You shift allocation. You adjust the flow of billions. There is no anxiety here. There is no joy. There is only the cold, sterile hum of absolute control. You live in a frictionless vacuum. Your decisions alter the geopolitical landscape, but you feel nothing. The gap between your actions and their devastating human consequences is an ocean, and you never have to cross it. You have bought your way out of the human experience. You are sitting in the back of a chauffeured car. It is 2 in the morning. You look out the tinted window at the glowing skyline of the city. In one of those high-rise buildings, there is a light on. Somewhere up there, a 22-year-old is sitting in a cramped apartment that smells like damp cardboard. He is drinking bad coffee. His eyes burn. He is staring at slide 47 of a pitch deck. He checks his bank balance. It is $412. He thinks if he works hard enough, he will build the future. He thinks he is a visionary. He does not know he is just inventory. He does not know what it will cost him, not in dollars, in distance, in the complete erosion of his own soul. The machine does not care. The machine does not ask if you are ready. It opens every morning and it takes whoever shows up. The balance is $412. It always starts there. It always will. If you want to understand the invisible machinery that grinds your life into profit, hit subscribe. Until next time, keep chasing the unicorns. Just make sure you aren't the one being slaughtered for the horn.